So that was the position yesterday on Euro USD. That was Euro JPY today and GBP JPY today. Now, let's talk about GBP AUD. I've got a lot here, so take some notes, put your phone down, close Facebook, and I think you'll find some value. So the first thing we'll discuss here is that I made a mistake that I think you should write at the top of your notes when thinking about this trade. If you screenshot this and save it, whatever you do, write this down. The mistake here is that I went off edge in moving my stop loss lower. Instead of reacting to what price was doing, I was biased in my confirmation that I thought this was going to be long just based on that perfect market sentiment today. So I ended up moving my stop loss lower to about 18 pips and getting tagged out here as it broke through the 800 EMA. I convinced myself that even as it shifted back down here, if you actually look inside these candles, I was in the trade as it shifted up, and then it shifted back down. A shift is when the 8 and 21 EMAs cross. So I was in the trade here, and then I ignored the downshift here. I could have easily just got out of this trade minus 2 pips and either found another entry or whatever, even just closing half of it. I was watching it, and I was thinking about doing it, but instead I talked myself in the idea of just staying in. Maybe it holds the 200 EMA, this white line right here, and it comes higher. And it didn't do that, of course. So again, the issue here is that I just broke the edge by moving the stop lower. I could have been out of the trade like this. Here was the entry on the 1 minute. I'm going to show you in a second. The bottom here of this divergence structure is where the stop loss goes. That's where I could have been stopped out fully for, what is that? 98, about 12 pips at most. Here's my note where I could have even closed it, like I said, down 2 pips and just washed out break even. Instead, if you go to the 1 minute, you'll see where I moved my stop to. I ended up just giving it more space, which ended up costing me a little bit more money. Now, when I get into the reason why I moved the stop, maybe you'll understand. But either way, the lesson that I want you guys to take from this is we have stop losses for a reason. And also, none of us are perfect. You guys look to me and I feel like I have a lot of pressure on me to always be on point, always be accurate. But I also hold myself accountable to say, look, when I make a mistake, I made a mistake. I shouldn't have moved my stop loss. I should have got out of the trade as soon as it broke down here. And even if you've watched my other streams, you know, once this 1 minute market sentiment line, this yellow line, simple. Once this moves under the 50 value, the trade is beat if you're looking to buy it. Same thing if you were looking to sell it. When it moves into the buy zone, it's beat most of the time. So it's smart to take that seriously and consider closing some of the trade there always. And I didn't do that either. So I was just ignoring the signs that this wasn't working for me. I was forecasting more than reacting. That's the takeaway. So again, TDI moves lower. Price action, as you can see, just sucks lower. And then again, at like 7:15, 7:30, this happened at 7:20 right here. It ends up just sucking lower. So in that 15-minute bar, in 4 minutes, 5 minutes, it ends up moving from 120, 182.90. It drops about 30 pips in 5 minutes, 4 bars. So that's pretty substantial. You know what I mean? Even for a GBP pair. And it's honestly predictable just because look at where the market sentiment line was. So that's the idea here this morning on the 1 minute, why I moved the stop. Now, let me explain a little bit more about why I did move it, because it's not just like I was married to it and I dropped it. You can see we have that whole number for Forex just because it's 1.83. You see that right here, right? So that was where the stop originally was. I thought that my stop being on that whole number, it might be an issue because I thought it could hit that whole number, which was also the 200 EMA, and come higher. As you can read from my notes here, I thought it could hold that key resistance level, support level that it held last night and move off of it again. So I just wanted to give it more space, and I justified it by saying, okay, the 200 EMA is there and it's a significant price level. On top of that, I have started to use TrendSpider a little bit. I don't know if you guys are familiar with their charting platform. I'm inching my way into their platform. They set up the TDI for us. They're working on setting up ADR. And with their platform, they have volume. And one of the volume indicators showed a lot of buyers at 1.83. So that was just another confirmation, not anything super serious yet, but just another confirmation to me that this 200 EMA zone in here could have been held and we could have seen it move higher from there. But we didn't, and I ended up getting stopped. So I think just the takeaway is don't let something that comes in on the day of you taking the trade change the idea that you've worked so hard to prove in that stop loss through your back testing. We've done so many markups on not just the D1 strategy, which you see here, the A1 and the D2 as well. So when we put all the work in to test the system and really perfect the questions that we ask ourselves before we take the trade and how we identify the risk, I think I just kind of ignored that today and wanted to see it come higher just based on this perfect market sentiment line. So you can see today it looks really good for buys. The other things against it that we should discuss, as you can see from my notes, the bearish divergence on top. If I blow up the RSI, you can see it is falling from today's RSI high to the price action high. It is falling. And on the price action, it's rising. So because one is falling and one is rising, that's the divergence that we would identify to tell us that the rise that's happened overnight could change. This divergence tells us change is coming. Does it change and drop like this? Does it change and go sideways? We don't know, but it's important to just knock the trade size down when you do see divergence against the direction you're looking to trade. I was anticipating to trade from the 50 right up to this divergence line, right up to this blue box. That blue box is yesterday's high. If you go back to Monday, this is Monday's high. And even if you look at Friday it came to that price level and couldn't really stay above it either. So I knew there was a lot of resistance up here, but I thought because I could get, 2.4R to the divergence zone and the high from the week, high from yesterday, then it made sense to me. The risk reward was good. And the only other thing that I would say is a knock, if anything, against it is that it was in a downshift when I took the entry. You see how the red 21 was above the 8 yellow EMA right there? It was in a downshift briefly when I took the position. It tried to shift back up. As you can see, the EMAs get above, 8 gets above the 21, and then it ends up coming right back down. And you guys know, if we're going long, we would much rather be in an upshift already when we take the position. It just makes the long positions much more favorable to us. So that was another thing that I knocked against it. And as you can see in my notes, I wrote maybe a C setup. B might have been too aggressive. So when you're going through with 2 knocks on it, most of the time it's going to be a B or C setup. You can't call something with 2 things against it an A setup the way that we grade our trades. So it just depends on your risk profile personally. And again, with small size, this is a controlled loss, and it should still not really phase you on your view of the entire week. We had a great trade yesterday. This is still a great trade setup. We just don't know the outcomes to all the trades. We are supposed to just take the best ones that we can find. And from the watch list today, this was the best trade of the day. Market sentiment line here in the buy zone all day, space to move on ADR until it's moved lower now. There was a lot of space to move. You had a target with the high of a week with the divergence line, which still gave you 2R. So everything was still on edge. Where the edge was broken is when I moved the stop loss and I dropped it lower. So that's the idea here on GBP AUD. The only other thing I would tell you is the higher time frames were more long biased than short biased. The 4 hour was the only time frame that was somewhat short biased, but the 1 hour and the daily time frame, price action and the TDI are both long biased. So it's not like I was going against the higher time frame trend either. So I think, again, most of the things were on my side here, but again, we just can't predict the outcome. And this is why I just tweeted this a few minutes ago. This is why I think no matter how much we love a trade setup, we can't size into them more than what our plan allows us to. So you should have your risk profile predefined before you start trading, which means if you find a setup like this where it's a B setup or even a C setup, it should have a percentage of risk based on your overall account that is always going to get put on, for example, B setups. And C setups should get a little bit smaller of size. And then when the setup presents, no matter how much you love it, right, even though it's the best trade of the day, no matter how much you love it, you shouldn't break the plan and put more size. If anything, you break the plan and you size down because you don't love it enough, but you never want to oversize and think, okay, this is the best idea of the day, so it should get double the position size. How do you know it's going to be a winner? You can never predict the outcomes. So I think you have to keep position sizing consistent and controlled. Otherwise, you'll get blown out very quickly. So that's the recap on GBP AUD. Let me know if you guys have any questions about it. I'd be happy to answer anything that you guys need.